Bitcoin's price has been dropping for almost a month now and is currently down 15% from the recent all-time high. Because of that, many people are calling the top in and claiming that the bull run is over. But is it really the end, or is this just a temporary pullback? Let's find out. Hey guys, welcome to the Bitcoin Experience. In this video, I want to go over what's been happening recently with the Bitcoin price. There are a few charts and data points that I want to share with you so that you have a better understanding of where Bitcoin might be heading next. Now, if you get value from this video and you find it useful, it would help me a lot if you gave it a like, subscribe to the channel, or leave a comment down below. And with that said, let's get right into it. Okay, let's start with the Bitcoin daily price chart. I've marked the latest leg up, which started on November 4th with a Fibonacci retracement, which is a tool that shows potential support or resistance levels based on key ratios. Now, the levels I'm focused on are between 0.62 and 0.79, known as the deep discount area, which often acts as a magnet for price. Another key point is the broken upward trend line, now acting as strong resistance. Now, the last time price revisited this level, it was sharply rejected, which only added to the bearish pressure. I've also highlighted a gray box covering value gaps. Now, value gaps are areas where price moved very quickly, leaving behind minimal trading activity. Historically, Bitcoin tends to go back and fill these gaps to create a more even price structure. And finally, the liquidation heat map shows a cluster of leverage positions in the 70.5k to 85k range, with the largest concentration being around 72k. These levels also act as magnets for price. All these factors together suggest the 70.5k to 85k zone is an area to watch for a potential short-term price correction. And with price already down 15% from the all-time high, a drop to the levels we mentioned would result in a 30% correction. Since I filmed this video, Bitcoin started pumping, as you can see on the chart, and today it reached the trend line again, but it seems that it got rejected once more. So I just wanted to quickly mention this update in the video, as it will otherwise seem outdated. Now let's look at global liquidity and its impact on Bitcoin's price. The price of Bitcoin is closely tied to global liquidity, and this chart clearly illustrates that relationship. Historically, when liquidity drops, Bitcoin tends to follow with a lag of about 13 weeks. As you can see, global liquidity has been decreasing over the past couple of months, and Bitcoin's price has started reflecting this decline, as we saw earlier. Now, this reduction in liquidity means less money flowing into assets like Bitcoin, which are considered risky. And typically, this leads to a price pullback. Given this pattern, we're likely to see Bitcoin continue to follow this decrease in liquidity in the near future. Next, let's discuss the impact of rising yields of US Treasuries. The yield of the US 10-year Treasury has climbed to 4.782%, up from 4.151% just over a month ago. This increase makes Treasury bonds more attractive compared to risk assets like Bitcoin. As a result, money flows out of risk assets and flow into what are perceived to be safer investments. And this process also draws liquidity away from Bitcoin. So higher yields make investors prioritize stable returns over the volatility of assets like Bitcoin. This shift is another key factor that puts pressure on Bitcoin's price. Now, I know what you're probably thinking. Isn't this a sign that the Bitcoin bull market is over? And the answer is not at all. If you look back at Bitcoin's performance during the 2020 and 2021 bull market, it went through 9 price corrections ranging from 15% to 50%, as you can see from this chart. And each time, Bitcoin bounced back stronger than before. Yes, those dips can be scary in the moment, but they're completely normal in a Bitcoin bull market. And guess what? After every single correction, Bitcoin went on to make new all-time highs. So a 30% pullback to 75.5k is well within the range of typical corrections during a Bitcoin bull market, which basically means there's nothing to fear. In fact, this would be an amazing buying opportunity for anybody who plans to hold Bitcoin for the long term. So here's the bottom line. Bitcoin is a long-term play. If you're saving in Bitcoin, you need to be prepared for the volatility. We've seen Bitcoin drop 30% or more during bull runs before, and it always came back stronger. The key is to have a time horizon of at least 4 years. Historically, if you stick to Bitcoin for 4 years or more, you'll see significant returns despite the short-term volatility. So if you're planning to buy and hold Bitcoin, please remember that these type of corrections are both healthy and normal. All you have to do is be patient, keep stacking sats, and be sure that over the long term, Bitcoin will continue to rise against fiat currencies. And that is it for this video, guys. Thank you so much for watching and sticking with me until the end. Don't forget to give this video a like if you got value from it, and consider subscribing for more valuable content. If you have any questions, feedback, or even criticism, please write them down below in the comment section, and I'll make sure to reply to every single one of you. Until next time, guys, keep stacking, keep hodling, and remember that a Bitcoin DCA keeps poverty away.